Hello there, Stieg Strand. It is early in 2023, and I wanted to say thank you for listening and watching the video. But more importantly, it's going to be a good one. It's going to have a lot of information in it in a very tight period of time. We'll look briefly at 2022 and look at what's going to happen for 2023. One of the reasons why it's important is that real estate is local. Everything about real estate is local, and a lot about real estate is timing. And right now, the national forecast is doom and gloom in a number of places. Minnesota, not so much. Most of Minnesota, and especially the Twin Cities, is fairly positive. As a matter of fact, I did some research, and the most positive and the most negative real estate information that I could find out in the hinterlands was interesting because both of them predicted that there would be price appreciation in the Twin Cities metro area. Realtor.com and the Twin Cities Business Journal had a big spread here recently, and they predicted that home prices would increase about 5.6%, which I think is a little optimistic, but I think it's fantastic. Also, a data guru by the name of Marco Santarelli, looking at my notes, he owns or comments for Norada Real Estate Services, and very, very reputable, and doing a lot of things for estimates all over the United States, especially in residential real estate. And he predicted, and this is very pessimistic, but the most pessimistic data-based piece of information I could find is he said that real estate in the Twin Cities would appreciate at 0.6%. So get ready for your home values to go up by 0.6%. And again, that's the most pessimistic. So if you've been reading any of the emails that I send out a weekly email, and through December, I've been putting in pieces of information, really good pieces of information that that people would like to see, in the Southwest Metro, and I wanted to share that with you. And by the way, what I have utilized as the pieces of data for the Southwest Metro is Eden Prairie, Minnetonka, Chanhassen, Victoria, and Chaska. And of course, there's a greater area there, but that really encompasses. It makes the data hard to snag if I do too many cities at once. But if you look at what happened in 2022. I wanted to share just a few things with you. Number one, the average closed home. So this is a home that went on the market and closed. Their square footage, went up 8.6% in price. In other words, the average at the beginning of the year to the average at the end of the year was $184 a square foot at the beginning of the year. And at the end of the year, $201.50 for the average square foot sold. So it was impressive. That's an impressive increase. The average price a seller received when after their initial price. So let me just kind of paint that picture. So the price starts at a certain one. That's the initial list price. The average seller was receiving roughly that about that, a little, maybe a touch more on average at the beginning of the year. It went up about to 104, 105%. And by the time the year was over, it has settled in at about 96%. So basically, we started at about 100%, went to 104, 105, and then went down to roughly 96%, which means that sellers on average have, for the year, have had to cut their prices about 4% from their initial list price. And I think that given all of the financial, especially with the interest rates spiking, that's pretty darn good. It's impressive in that respect. But anyway, a couple of other things. The demand is still incredibly high for homes. Right now, the supply of homes, which is called the saturation rate, or the months supply of homes, is about 1.2, 1.3 months, which means that at the beginning of the year, it was about 1 month. So even though, we've had this tumultuous year in real estate and with the interest rates, the amount of homes on the market to satisfy the demand was a month a year ago. And right now it's a little over a month at 1.2 months, which means it takes about a week longer to get rid of to sell every home that's on the market. And that doesn't, we'll talk about something else that affects that. But most importantly, what it means is the supply is still limited, and it will continue to be limited even into the new year because, or in part because, the demand is still really, really high. So the demand will continue to be high, and the supply is not going to get a lot more, a lot bigger. So what's going to happen is that provides a element of keeping prices stable, and I think that's the biggest single reason why, especially in Minnesota, Twin Cities, Southwest Metro, we're not going to see a real estate crisis or an implosion or an explosion or a doom and things of that nature. And I honestly don't see it for much of the United States, but especially with in the Twin Cities, we will see a fairly stable marketplace because supply will not outstrip demand. Therefore, demand will kind of drive it. Now, the single largest negative, and it kind of rolls into what I was talking about saturation rate, is that home sellers are taking longer to sell. Homes are taking much longer to sell. At the beginning of the year, homes took about 13 days to sell. As of last month, they were taking about 34 days to sell. What does that mean? Well, it means that a few things, and we can kind of anticipate these for 2023. Home sellers are probably going to need to be a little more patient. It's going to take a little longer to sell the home. And remember, that's an average or even a median of 13 days, and now an average or median 34 days. So some homes will sell a little quicker and some homes will sell a little longer. But in general, it almost tripled the amount of time it takes to sell a home. And, we can talk about all the different reasons why, but that's not really as relevant as home prices are still good. The homes are still selling, and they will continue to sell, and appreciation will be there, but very small or limited, maybe 0.5% a month at the very most for appreciation, not depreciation, for the 2023 year. And then take longer to sell. I think that trend will continue. It's going to take a few weeks or more to sell a home, possibly even a couple of months, especially for homes that are not specifically in a very, very tight price or high demand situation. But sellers are going to want, if they're going to want top dollar, or if that's their desire, they will need to very much so prepare their home accordingly. And I think buyers have the ability to be fussier because they're being stretched financially, and they don't want to pay top dollar for not a top dollar home, so to speak. So that will definitely be taking place. If a seller isn't as interested in getting the most amount of money, then it won't be quite as big of a deal. And then lastly, with the mortgage rate stabilizing and even fluttering down right now as I speak, a person with good credit and paying a small amount of fees can get a 6% or certainly a 6.25% mortgage, which it certainly is far higher than it was for a long time, but it is settled off of those crazy highs. And so in 2023, we have a lot to look forward to. The marketplace will be sellers will be rewarded, buyers will have more things to look at. They will be able to make reasonable negotiations and concessions. And I think overall, it's going to be a really good year for sales because people are still looking, and rates have stabilized. And most importantly, people who are selling will actually have the ability to buy something, which I think is a big difference in our previous marketplace, which is some people just had nowhere to go because they couldn't find anything or buy anything because everything was selling so quickly. So they were kind of stuck in their home a little bit. Good stuck, but still stuck nonetheless. Anyway, there you go. Hope you're having a good day, and I hope you're having appreciate your time, and I appreciate you listening to this video, and I'm sure there's 3 of you out there. No, just kidding. All right. Talk to you later. Bye-bye.